Hey guys, this is Randy with the right side of the chart. Today is Friday, March 23rd, 2018. As we head into the last half hour of trading, I wanted to put up a trade idea that I want to hold off until next week, being that it's Friday, markets are down, and we're still, as I posted in the trading room, there are certainly some key stocks that are giving way, just starting to break some key support levels, Apple and some other ones. SPY, the S&P 500, SPY is looks like barring a crazy stick save into the close, which I do not expect, that'll close below its weekly uptrend line off the 2016 lows, early 2016 lows. So there's a two plus year trend line. But QQQ has not failed that trend line yet, and there are still some stocks clinging to support. So um, you don't want to, at least in my opinion, you don't want to short aggressively here if you're not already short. If you've had shorts, you want to ride them out like the existing swing shorts on the site. I think those will be fine, but let's see what happens next week. No reason to put on a trade idea right in front of a weekend. You have 2 days of additional overnight risk, we call it. Anytime you take a trade home at night, there's headline risk. Anything can happen. So let me go over this video, and this will be quick because there's only looks about a little over a dozen stocks within this. This will probably be a trade idea next week with an entry to be triggered on a break of this uptrend line. What I'm referring to is BJK. That's the VanEck Vectors Gaming ETF. Tried to get as close as they could to blackjack on that ticker. So this one is holds as the name implies, casinos and gaming companies. And you can see here when we look at this weekly chart, this is a 10-year weekly chart. That it's just been defined by a series of divergent lows. This is just off the left of the screen. There was divergence, big positive divergence on the PPO there. And, as I like to look for these big divergent lows, in particular on the weekly chart, they lead to these big swing trades, trend trades, I like to call them. And you can see here positive divergence there. And although we did have, and it's not all drawn out here, guys, I really don't have time. I didn't have time to completely mark this chart up, but you can see there was a divergent high there at the highs. There was a divergent high here. It may not look like much. Remember, I always use log scaling, in particular on my weekly charts. Um, it's not as important on intraday charts, but that was a 30% drop right there. So if it doesn't look like much, let me assure you that it was, just like the rise leading up to that phone, the divergent low was 231%. So these are big moves. These are the trends. And now we've come full circle. Let me zoom in here. So we had this divergent low back in 2016 that launched a rally that so far was 84 or so percent on this ETF. And what you can see I have circled here are divergent highs. And we had a divergent high here. That was the first one, led to a little correction, brought us back to the trend line. And it was this extreme, not divergent high, overbought. This extreme overbought reading here. You get that initial tag, then that second tag, that gave you the divergence on it really. That second reading was lower. And boom, that marked the end of that bull market and led to a bear market that saw BJK drop by 52%. So I'm just trying to gauge how much potential, if you're willing to ride out these counter trend rallies, there are, and particularly when trend trading. And that's what we're looking for here, potential trend trade. This is it. We were overbought right here at this point in time and did lead to a good drop. We started around that 41.65 level, corrected about 7%, nothing huge. But again, we were overbought right here, extremely overbought. That's brought us back to the trend line. And with the markets flirting on support, we may get a bounce. But as I often say, support is support until unless broken. So I'm not adding this one as an official trade yet, although there are quite a few individual gaming stocks breaking down. I'll go over that in this chart. So here's what the daily chart looks like. Uh, we didn't have a divergent high, but we did have an extreme overbought reading. And again, we're right on support right now. So this is one to watch next week. And quickly, I'll just go through some of the leading names within here. This is LVS, Las Vegas Sands. You can see we had a divergent high back here. I don't know if that was an official or unofficial trade idea. Sometimes I use different boards that have the targets on them as I'm clicking through here. But either way, you can see the divergent high, trend line break, back test. Right here was a trend line break, kicked back, and that one dropped a pretty good amount. That was good for a drop of about 19%. And so most recently we've had this pattern here, It's not super clear, somewhat like a head and shoulders pattern. You have maybe a left shoulder right here. Here, let me try to draw it out this way. Left shoulder, head, and two right shoulders. That's sometimes you get that. That's quite acceptable on a head and shoulders pattern, topping pattern. So there's the nature of that pattern. And like everything else, this one's on support right now. There's that trend line or the neckline, if you will. This is a upward sloping neckline, which is also perfectly acceptable for head and shoulders topping patterns. So I do need to update these charts. I haven't done so. I just want to get this video out, show you guys what I'm looking for next week. And of course, if you want to take any of these trades, some of them look good. LVS, you want to give it a little more downside, or maybe even short on a bounce next week if you can get a little kickback rally in anticipation of a breakdown of that head and shoulders. Here's MGM. MGM, this one has been, it looks like a trade idea in the past. We hit these two targets here. See the bearish rising wedge, divergent high, everything I like to see. It broke down, went sideways for a little bit, and then boom, fell, hit our first target there, second target, went a little bit lower, and this must have been a setup before, so forget about these targets. I don't see a trade here. Here's the uptrend line. I will update these targets. This, again, I have not had time before this video to clean these charts up. By cleaning it up, that means adding new support levels, targets, anything like that. And again, these are all unofficial trades at this time because this one, again, here's another big one of the leading. I have these sorted by market cap. So these are the big names. You all have heard of, if you live in the States or even around the world and you've been to Vegas, you know, Las Vegas Sands, MGM. I'll get to win next. It's right there dancing on support. So again, it wouldn't be um, let's just say it would be prudent to wait for either a break of support or a kickback to resistance, and we'll try to get a more favorable entry on that one if I put that as an official trade idea. There's Win. Again, probably could clean this chart up a little bit. I'll play around with the trend lines. I haven't updated this one in a while. Um, yeah, it looks something like this. That's probably the best fit I can give it for a trend line. Choppy action here, but this is a level I'd be watching right here. There it is, 160.36, and a lot of thin air. I don't see any, well, I see a little bit of support, minor support there along the way, a little stop there, 149.58, and then ultimately move down here to 139.28. And again, when we look at the weekly charts, this paints a bigger picture. When I'm on those daily charts, I'm talking swing trading. I'm talking, trades that I like to game, hit those targets. If it looks like a bounce is likely, reverse the trade or maybe cover the short and then wait for a bounce, get back in. But again, if you're a trend trader and you're looking for one of these trends, we get a trend line break here and winds probably coming back into, it's hard to say right now. I'll have to put a little more time and effort in analyzing these charts and updating it, but that's a minimum target down there. But again, you can see the big rips and dips when you go back to these weekly charts and try to capture these trends both on the upside and downside. Next one, MLCO, Melco Resorts and Entertainment. Again, I don't have this chart fully mocked up, but you can see here, easy to draw trend lines here, both up and down trend lines. And that's this is trading. This is technical analysis. It works. You have a downtrend, you break out, you go long. You have an uptrend, you break down, you go short, and that's what we're looking at here. I have a divergent high too on this one on the weekly chart. I like to see that. We go down to the daily chart. What do we see? A very, very defined, well-defined uptrend line. We had a minor uptrend line here, broke down and back tested. And once we take this trend line out, I will add some, stops along the way. But I think ultimately MLCO comes all the way down here to 1974. To quantify that for you, if and when we get down there, there's about a 27% drop. So a lot of meat on the bones for some of these trades here. CZR, Caesars Entertainment. This one already had a trend line there, broke down, a little bit of sloppy action. Saw that on a lot of stocks that have topped recently. But we'd have to give you a support level right here. We have a previous reaction low. We have a reaction high there. So see, a little more work needs to be done. It's already moved down quite a bit. So we're probably going to get a bounce here. And I may add some of these as official or unofficial short trades on that bounce. And again, I'll use the ETF. I'll try to give some targets there because I know a lot of individual traders Even if you do short, you're not very comfortable shorting individual stocks because you have additional risk. You short an ETF, it's a basket of stocks, and you can certainly lose money on an ETF as well, but you're not going to have any big surprises like an earnings miss or news related event that sends the position double digits against your against you and bypasses your stop. That's the risk you have with individual stocks. Risk and return go hand in hand. I can go through these charts and pick the most bearish looking casino stocks and probably outperform BJK by a good margin if I get the call right on the correction, and vice versa on the long side. There'll be times where we can go long and reverse that trade. But here's one that's already fallen quite a bit to support. Probably headed lower in time. Trend indicators are bearish, but let's see better fish to fry elsewhere. I like this one, IGT, International Game Technology. Big, clean, bearish rising wedge. Negative divergence tells me that wedge is eventually going to break down, most likely. However, I can certainly see the possibility of one last thrust up before that wedge does give way. So, one to keep an eye on. And a few more to go. We're almost done. TSG, the Stars Group. Here's the wedge I'm looking at, trend line. This one just broke down recently, but it's at support. So I've been watching these, but when you have a trend line break here and then support below, that's why I'm hesitant to add. Haven't added any of these as official trade ideas, but may do so soon. You can see all these potential targets on there. And again, I'll have to clean that chart up a little bit for you. I don't have anything drawn up on the weekly right now. Five more to go. SGMS, Scientific Games Corp. Pretty well-defined trend line, divergent high, negative divergence, but it did have down here after it broke down, had a little correction, put in a divergent low, but you can see this. It was a small divergent low, and it already did play out for a bounce. And the trend indicators, I've often talked about how on multiple time frames, the the PPO signal line, which is the 9 EMA, the white line, the last of the two to cross, just does on some stocks and indexes better than others. It does a bang up job in some cases of defining the primary trend. In other words, when that white line crosses above the zero line, the dotted line here, the trend is bullish. And that once above, it often acts as support on back tests. And so you can see every time we came back down, it defended that level and has told you, at least by this one indicator, that the trend on SGMS was bullish from the day it crossed here and until it crossed down bearish right here, and now it's coming back up. And just as that zero line will often act as support when tested from above, it will act as resistance when tested below during a downtrend. So I think this one, safe to say, it'll probably give way. I don't have the number right here, but this is the support line I'm watching. We've had already two tests of this level. That line was not randomly generated. It was also a reaction back here. And you can see some of the additional targets, and I highly favor in the coming months this 27.21 target to get hit. Stock's trading at 44.25, so you can see that's quite a bit of downside. Just this, you might have noticed as I was covering the PPO, I know I'm talking quick to get this video out there as soon as possible, even though we're not acting on it today. I just want to wrap things up before the close. Um, I mention this a lot using these trend indicators, or just about any trend indicator, but this one in particular. When you have a stock in a choppy sideways trading range, it's consolidating. Trend indicators, throw them out the door. Don't use them. The sooner you can recognize it, and obviously it takes a little while to recognize once a stock has stopped trending, like an uptrend or a downtrend, that it's in a consolidation period. So this was a basing pattern here, and the stock finally broke out of that base right there, back tested it and went up. But I just wanted to share that tip that when you are using trend indicators, and I'll share various trend indicators I use, they're great during a trending market or a stock that's trending, but don't even try to use them during a period of consolidation because all you're going to see are a bunch of whipsaw signals, bullish, bearish, and that's the nature of the trending choppy sideways action. All right, moving on. Four more to go. BYD, Boyd Gaming, breakdown, back test, and that one's already given up the ghost. There's more downside to come, but it's right now it's in what I call technical no man's land, which is when a stock is between support, which is my next target down here, and resistance, which was this target here, the 33-ish level. Hit that level, bounced along it for a few days, broke down, and it's right in the middle now. Um, I don't short stocks in no man's land because you can get a kickback to resistance. And it may continue down to support, but one of two things I would do with this stock: either wait for a bounce back to resistance to short it, wait for a fall down there to maybe go long if the chart's confirmed for a quick bounce, and then look for an objective reentry, get back in for the next swing down to 27.19. There's also a trend line here. I don't know if you can make it out on the chart. Maybe I have it here on the 2-day period chart. No, I don't, but I will add it here. There it is. There's a trend line that it's coming up on now. So another reason this one, it's quite oversold at trend line support. So you want to just maybe wait for a better entry on that one. Churchill Downs, there, that's where they hold the Kentucky Derby. Great place, but stock's not looking so hot right now. It just broke both this horizontal support level as well as trend line support. You can see the next stop down here is 237.16. Negative divergence at the highs confirmed the bearish nature of this reversal here, and tells us there's probably more to come in the coming months, because now we've broken the primary uptrend line support. That uptrend line comes off, the early 2017 lows. And, if things get ugly, you can see a support zone down here. But again, I do need to add these charts. There's different levels. This is another support level where I could see a reaction as being very likely, possibly one here. Again, I'll update these charts later for you. ERI, Eldorado Holdings. Looks like we had this one as a official trade back here. And right now I see a very well-defined trend line off the November 2016 lows. A lot of reactions along the way to validate that trend line. Little false intraday break. You guys hear me talk about, trading off the daily time frame. To minimize the chance of taking or going short on a false breakdown, you want to see either a very impulsive move and or a daily close below the trend line. We're going to get that daily close today. Right now, there's only 15 minutes left. Unless this thing has a, stick save into the close, it will close below that trend line. But I wouldn't short it right now because this is a very significant support level, 31.21. You can see a lot of reactions back here. I shouldn't say very significant, but a decent support level. Let me just clarify my words here. So there's only about 3% downside to that level. So an ideal scenario here, if we get it, markets don't always give us what we want, but would that be a move down to that area, kickback rally to back test the wedge from below, and then jump on board this one short for a ride down here to this target, which is at 27.21 roughly. And again, quite possibly more when you go out to the weekly charts. Just like the broad markets, they look like they look like death. That's what I was going to say. Anyways, that's what we're looking at on ERI. Here's this trend line off the lows here. Last time we had a correction in this stock, and keep in mind we were well entrenched in the middle of one of the longest bull markets in history. This bull market's now over 9 years old, so these corrections along the way were relatively minor. That was still almost 30%. We haven't seen a bear market. This stock has never seen a bear market. Looks like I'm going, or at least on this chart I can go back to 2009. I'm saying since this point on this 10-year chart, this is when the stock market bottomed back in March of '09. We've been in an uptrend, but yet you could still make, well into the double digits trading the corrections along the way. If we're in a new bear market within the next couple of years, as I suspect will be, the gains will on this stock, the potential is huge. I mean, we can come down. I'll just tell you now, before all said and done, I can see the stock going back down here to the 580-ish level, and that's about an 84% drop. Wouldn't surprise me one bit, and it may take a couple, year more to get there. But and it won't be a straight drop. There'll be plenty of counter trend rallies along the way. But a bear market is just like a bull market in reverse, just a little bit faster. Penn, last one, Penn International Gaming. Have a couple trend lines drawn here. Again, this chart needs to be cleaned up. You can see I haven't even touched that. Was a trend line I had way back here last time I drew it. And you see as I extend it, it just comes right in, comes off these lows, clips these lows, And there it is. The stock is at trend line support now, but these trend indicators are clearly bearish. This was a big, powerful divergent high. That tells me that counter trend bounces aside, the stock is probably coming back into at least this level here. That would be 2217, quite likely any of these levels. So if we hit that 2217 target, you're looking at a 13.5% drop. And if we come down here, that's about a 22% drop. So there it is. I'll clean these charts up. I'll put my favorites out as either unofficial or official trade ideas. Again, it's all about having to manage the amount of trades, especially in a fast-moving market. I still have to update GE. GE's been stopped out. It's still listed as an official long trade, but it's already hit the stop. I'll try to take care of that this weekend or any other trades that have hit targets that I missed or stopped out. And I'll give you some targets on BJK. Like I said, I'm going to put an effort on putting ETFs out there. Any inverse ETFs. Keep in mind, a lot of your more obscure or not as popular sectors like gaming, for example. Most people don't know of BJK or don't trade that ETF. Um, or even the gaming stocks. It's not a major sector, so therefore you usually don't have an inverse ETF in those type of sectors. I don't believe there is one for the gaming sector. So if you want to short either any of these stocks or the ETF, you'll have to have a margin account. Can't do that in an IRA. The only way to profit from a drop on a stock in an IRA, since you can't short, you can either buy an inverse ETF if there's one available, or you can buy put options or use some kind of put options combinations to limit your risk. But I really, if you don't know what to do with that, if I've had to tell you that you can use options to shorten an IRA, you probably don't have the experience. And I would just strongly encourage anyone that is not well versed with trading and experienced with options not to start jumping into those. Learn the basics of trading 101. Learn how to read the charts, trade individual stocks, trade without using leverage before you jump into the world of options. And I encourage everyone to read up on everything there is. Options, futures. It just takes a while, and I can tell you there's fewer, quicker paths to financial ruin than jumping into things with an extremely high degree of leverage like options or futures contracts if you don't know what you're doing. So be careful there. That's all I wanted to say. All right, this has been Randy Finney with the right side of the chart. Have a great weekend, and I'll follow up with some of these trade ideas next week.